Hey, what's up, everybody? Happy New Year! 2019, first trading day of the year. And it started off ugly, but that was a big fake out. Actually, this morning, I sent out an email to MMT Trader subscribers that they should not react to the 300-point down opening, basically based on some moderately weak Chinese data in just one aspect of the Chinese economy. The U.S. economy is the U.S. economy, and while we can say that the global economy, countries are interconnected because of trade and whatnot, the U.S. economy is the world's largest economy, has its own economic fundamentals, of which I have been talking about. And in my email this morning, which I said you got to be buying this dip, I pointed out once again all of the positive economic and fiscal fundamentals. I went through the list, and starting with fiscal flows that are very strong, starting with tax receipts, which are very strong, including employment and withholding tax deposits to the federal government, unemployment benefits being paid falling year over year. I mean, I went through a number of things. I sent out a whole bunch of charts in those in that email where you look at those metrics. And again, over the weekend in my report, you could see also in the banking metrics, once again, very strong increases in bank credit, strong increases in loans and leases. I mean, right down the list, all down the list. As a matter of fact, we saw automobile loans rising to an all-time record high, and the growth rate lifting up, I think it was to the fastest rate in a month now. It's still kind of sluggish, but it is picking up despite the fall in the stock market, which has been ongoing now, I guess, for 3 months, maybe a little bit longer. So that's what's interesting, is a lot of these economic metrics are actually picking up or accelerating despite the fact that we have seen the stock market. I think it was said that December was the worst market since the Great Depression. And I mean, we're not in a depression. The economy is growing around 3%. So it's clearly an overreaction. And it looks like at this time that the December 26th low was the capitulation low. At least that's what I think. Today's reversal was another good performance. We'll see if it holds by the end of the day. But again, I try to make this scientific. I try to avoid getting caught up in the emotion and the headlines. For example, there was a headline today that the U.S. PMI, Purchasing Managers Index, hit the lowest level in 15 months. But it didn't tell you that it's still in an expansion. It was 53.8. All you see in the headline is that dire headline, the worst PMI in 15 months. But that's still an expansion. And I see a lot of other comments which display an erroneous or flawed understanding of economics. Like I see a lot of comments talking about how the Fed's balance sheet reduction and rate hikes equate to a double tightening, when I sent out an email on that today showing data and charts how the increase in interest rates have led to a net increase of $200 billion to personal income, and how the reduction in the Fed's balance sheet has led to an increase in the assets owned by the non-government, the private sector. So it is not a double tightening. It's actually a double stimulus. Now, I'm not saying it's shared equally among all people in the economy or all entities in the economy. Clearly, it's not. But it flows into the economy in the aggregate, and some, if not all of that, is spent, so that flows to others within the economy. So a lot of this is based on really, really flawed understanding of economics. I try to turn this around. I try to focus on science I stay away as much as I can and try to help people to stay unemotional about this. Remember, this is all mental game. Emotion will kill you, and this is the way most people invest. They invest emotionally, they invest reactively, as opposed to keeping your eye on reality, on facts, on data, and focusing longer term. It's all about behavior. It's all about behavior. So, good start for the first day, especially if we end up closing higher after a very ugly beginning early this morning. And we'll see how this plays out. But right now, exactly as I thought, I sent out the email earlier today. Actually, sent out quite a few emails today. If you want to sign up for the MMT Traders Service, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. Check it out yourself. If you want to sign up for zombie trading, by the way, today, oil prices suddenly shot up, and I sent out an update for zombie trading to buy Canadian dollar. We had a big rally, so we sold dollar Canada. We bought Canada yen. Big rally for Forex if you're in the Forex trading arena. So that worked out very, very well. You can get both of those by going to pitbulleconomics.com, signing up for a 30-day free trial. If you want both together, you will get a special rate. Just send me an email, mnorman@pitbulleconomics.com. See everybody tomorrow. Bye-bye.